Welcome to the latest edition of Fundamentals. This time around, I'm going to look at an actively managed member of our list of 72 favourite funds, namely Kames Investment Grade Bond Fund. The fund's objective is to maximise total returns for investors through a combination of income and capital gain. As its name rather suggests, the fund invests primarily in investment-grade corporate bonds and government bonds, traded loans in other words, that can be priced in pounds or other currencies. Up to a fifth of the fund can, however, be invested in so-called high-yield or junk bonds, but the focus is on those firms and issuers with healthier balance sheets. This means the risks are generally lower, but so, generally, is the income generated by the coupons or interest payments made by the bonds in the portfolio. Just by way of reminder, an investment-grade bond is anything rated BBB- or above by the credit rating agencies Fitch and Standard & Poor's, and anything rated Baa3 or above by Moody's. Anything below that is known as sub-investment grade or high yield, or to use that pejorative term, junk. Edinburgh-based co-managers Stephen Snowden and Ewan McNeill both have more than 20 years' experience of the financial markets, and this particular fund class dates back to summer 2006. The fixed income or bond team at Kames has a good reputation, and the portfolio is run on a high conviction basis, where Snowden and McNeill only take on credit risk when they feel the rewards justify that risk. This approach can result in some short-term volatility in the price of the underlying holdings and therefore the portfolio, although thus far the fund's long-term track record is good. This chart shows the fund's capital performance since its launch just over 12 years ago, although of course we must all accept the past is no guarantee for the future. Now, as I sit here, there are 138 bonds in the fund and it's well diversified. The top 10 picks represent only 15% of the £1.5 billion in assets under management. Leading portfolio selections include bonds issued by GE Capital, the Dutch lender Rabobank, US investment bank Goldman Sachs, HSBC, and also British life insurer Aviva. The average credit quality of the portfolio is BBB, and the overall credit profile of the fund is shown here. This next graphic shows the maturity profile of the bonds owned by the fund. Then we come to the yield on offer. Kames Investment Grade Bond Fund currently offers a yield of around 2.7%, and that comes from the coupons paid by the bonds it owns, where the range of payments is shown in this chart. We're talking about the income units of the fund here, so it will distribute those payments to you, and it will do so on a quarterly basis at the end of March, June, September and December. The fund comes with an ongoing charge figure of 0.78%, so you do have to pay for the manager's expertise, and for those who put faith in such things, the fund comes with a 4-star Morningstar ranking. As a final point, Kames Investment Grade Bond Fund is eligible for SIPs, ISAs and dealing accounts, and the minimum investment is just the one share, and that would cost you around 123 pence at the moment. So those are the mechanics. The question to address next is why could investors consider this fund for portfolio inclusion today? And I think there are 3 perfectly possible reasons. The first is that 2.7% yield, which comes from the coupons paid by the underlying bond holdings. That yield beats cash in the bank, the yield available on the benchmark UK 10-year bond, or gilt, and also the current UK inflation rate of 2.4% on the Consumer Price Index, or CPI. The second possible reason is portfolio diversification. Lots of investors may be drawn to equities or stock markets in search for yield, but bonds or fixed income is an alternative asset class to consider. And the third, well, that's the track record of the fund. As we've already seen, the fund has provided capital growth since its 2006 launch to supplement the yield it's generated. However, we must always remember that past performance, again, no guarantee for the future, and the Kames Investment Grade Bond Fund may not therefore be suitable for all investors, also for 3 possible reasons. The first is that bond funds can go down in price as well as up, as the sharp dip of 2007 to 2008 suggests on that earlier chart. An individual bond can be bought at launch and held until maturity when you get your money back, assuming all is well, but a fund has no maturity, so you are exposed to price swings in the underlying portfolio. You must consider this risk relative to the potential for upside and the yield on offer. This graphic here shows how investment grade bonds did relative to other major asset classes in the first half of 2018. And as we can see, equities and commodities just did a lot better. Research from Morgan Stanley suggests investment grade bonds are actually on course for their worst year since 1996, although some of you may see that as a contrarian buying opportunity. The bond fund's diversified portfolio may protect you from one risk associated with bonds, credit risk, or the issuer or borrower not paying the coupons or even worse going bust. But there are still two dangers with any fixed income investment, which must be considered whether it's a fund or just a single bond. One is inflation. If it creeps higher, it may start to erode the value of the coupons and yield you get from this fund in real post-inflation terms. The second risk is interest rate risk. If central banks raise interest rates, this will increase the returns available from cash, and that could lure investors from bonds and back to cash. It may also persuade investors to sell their existing bond holdings to buy new ones, which may come out with a higher coupon to reflect the interest rate increases, and that selling could drive down the price of bonds already in issue. Now, the US Federal Reserve is raising rates, the Bank of England is talking about it, the European Central Bank's looking at it, even if the Bank of Japan seems to be in less of a hurry. What all of this goes to show is that investors must therefore do their research on Kames' investment grade bond fund to make sure that it fits with their overall strategy, target returns, time horizon, and appetite for risk before they put any capital to work and indeed at risk. Thank you for watching, and I look forward to seeing you next time.